Now, there are some rules around owner income, and there's been a recent clarification around S-corps and C-corps. We have not seen that for LLCs and partnerships. So at this point, there's been clarity for S-corps that if you have an owner of an S-corp or a C-corp that owns less than 5% of the company, they're treated as any other employee. People that own greater than 5% are limited to that 20,833, which is 2.5/12. So they never allowed you to get that 24 weeks as an owner. You're only allowed that 2.5/12, 2.5 months of wages. So on partnerships, your partners are limited to the lesser of 2.5/12 times your K1 self-employment earnings times 92.35 or 20,833, whichever is less. So there's some limits on partnerships, and self-employed people would also follow that same ratio. So 20,833 is the most that you're going to get to claim as an owner if you're in a partnership and you have self-employment earnings that are at least about 108,000 or more. And LLCs are a little bit tricky because they follow the tax filing structure. So if you're taxed as an S-corp, you'd follow the S-corp. If you're taxed as a partnership, you'd follow the partnership. All right, so taxability of PPP. Expenditures that are forgiven are not deductible. And this was hotly debated in the last congressional round when the next round of PPP money was approved. There was quite a lot of conversation trying to fix this. A lot of senators wanted to fix the fact that the expenditures, for example, the payroll that you're going to have forgiven is not going to you're not going to get forgiveness for that on your federal taxes. So those expenses are not deductible. So if you had a traditional year, you would get to deduct your payroll taxes. Well, if you get the amount forgiven for payroll, that is not included. So that gets excluded and not deducted. So in some cases, that can be a considerable number. If you're in the upper tax bracket, 38, 40%, they get taxed at the normal federal income tax rate. So that's something that hopefully Congress will be able to clarify. It was not the intent, according to several of the senators, was to add this burden on. But if you had $1 million loan and it all got forgiven, and you're in a 38, 40% tax bracket, that money could all be taxable for those expenditures. So I'm hopeful that gets fixed. So many people are hopeful that gets fixed in the upcoming congressional sessions as we look towards another round. That was not, as I mentioned, the original intent, according to several congressmen, of the PPP was to slap a big tax bill on people that got forgiveness. Now, a lot of people could argue back and say, well, I'm going to be in a loss position this year anyways, so it's not going to really matter to me. But some people are doing okay, and they may end up, if they have forgiveness, they may end up in a taxable situation that they weren't anticipating. And as we know, moving into spring in Washington State, traditionally through the winter, cash flow gets very difficult, and to get a big tax bill at the end is not going to be a very pleasant surprise. So I'm hopeful that they clarify this. As I mentioned, so many others are as well.